Enterprise Singapore has also slashed its forecast for non-oil domestic exports and total trade for 2020. Projections have been adjusted downwards to between negative 0.5% and 1.5%. Enterprise Singapore says the earlier forecast of between 0 and 2% had been premised on a modest pick-up in global growth. But things have changed since November. The COVID-19 outbreak has affected many of Singapore's key trade partners, China top among them. Lower oil prices are also expected to weigh on oil trade. Data released by Enterprise Singapore shows that in January, NODX declined 3.3%. The decline in electronic exports was the main drag, led by slower demand for integrated circuits, personal computers and telecommunications equipment. Now, as for non-electronics exports, petrochemicals, pharmaceuticals and electrical machinery fared the worst. Exports to the majority of Singapore's top 10 markets also decreased in January. Economists, though, say the outlook for the US and Eurozone economies remains broadly unchanged, and this could help to prop up export growth.
If this persists into 2020, some of the green shoots could be from the US and Europe markets, more so the demand. But given the fact that the structure of the Singapore economy is largely on manufacturing as well as more so electronics and non-electronics perspective, and for the matter, our key consumers does not only account for US and Europe, but for the rest of Asia as well. The outlook isn't going to be as positive as we first started the year in 2020.
And join Dawn Tan tomorrow from 2:30 in the afternoon, Singapore-Hong Kong time, for a complete coverage of Singapore's Budget 2020. Finance Minister Heng Swee Keat will outline his plans for the year ahead starting from 3 in the afternoon. And then CNA's reporters and panel of experts will break it all down. That's Budget 2020 live tomorrow, online at cna.asia, on radio on CNA 938 and right here on CNA TV.